Tesla stock is at crossroads. On one side, we have the optimistic view of Tesla Optimus and full self-driving, whereas on the other side, we have the traditional automotive electric vehicle business that is facing immense competition, especially from China. We can see that in China, companies like NIO and XPeng, very small players, are outselling Tesla for the majority of the first 16 weeks of this year. Other than a few weeks in March and early April, Tesla has not managed to keep up at the pace of NIO and XPeng. And remember that NIO and XPeng are not the only players in China. We obviously have Li Auto, we have BYD, we do have Zeekr and all the other like Geely companies like Link & Company, then you have the Xiaomi company. So there's a lot of competition heating up in China. Then you might think, what about Europe? Where here's the sales numbers from Europe this year. A lot related to Elon Musk and his comments, I do believe. So he needs a huge job in terms of PR and imagery branding in order to convince the ones liking European consumers to now again start to buy Teslas. Historically, Tesla has been large in Europe. You see Teslas everywhere. But this past 6 months, he's done immense damage to his image, in my opinion. So looking at the average sales price of Tesla cars from the left, Q1 of 2022 in the blue, you can see that the red bars, which are the profit per car, were quite substantial actually. They were making a lot of money in Q1 of 2022 on each Tesla sold at a time where obviously there was shortages of electric vehicles, shortages of everything. But ever since, they've been steadily kind of losing their profit per car. And you can see now in Q1 of 2025, they're like at a fraction of the amount of profit that they used to make per car sold. This has to do partly that back then, a lot of the sales came from Model S and Model X, much more expensive cars. And right now they're selling much more Model Y and Model S's, and Model 3s. We can also see here that the revenue and the gross profit, net income, and in the green, the important one, regulatory credits. Why do I say that? If you look at Q1 of 2025, at the end on the right side of the bar, you can see that that one is actually exceeding the net income. If you look at this image closely, you can see that more clearly that the green bar is larger than the white bar, which is again regulatory credit, is exceeding the net income of the company. So the amount of profit that the company made, if they wouldn't given the regulatory credits from CO2 emissions from the companies like I guess Ford and other legacy automakers, they wouldn't even be profitable. I also added the energy business, the megawatt hours shipped in terms of batteries. You can read that on the right side of the scale in the blue numbers. And I'm just doing this to show you that despite the immense increase in sales volume for the batteries shipped, the profit is nowhere near the kind of profit that they used to have. Like the net income, the white bars were much higher on the left, like in 2022, than they are right now. And I don't believe that this is, a one-time off. I believe we are going to an environment where Tesla is struggling in Europe. They might not struggle in China, but they have huge competition in China. So they won't gain any market share. In fact, looking at market share in terms of electric vehicle sales between Tesla and the main competitors like BYD, obviously that is the main one. But then you have the likes of NIO, XPeng and Li Auto, seemingly small players. Look at 2020, Tesla sold 500,000 cars, representing roughly 60 to just below 70% market share, even with BYD included. But obviously BYD doubling or tripling sales from 2021 and 2022 to almost 1 million, and essentially catching up with Tesla in 2023 and by far passing them in 2024. But looking even at the other players, their sales of Tesla have not gone in a way that we expected. 2023 1.8 million. Everyone expected 24 to be well above 2 million by early of 2024. But then again, the same scenario for 25, I think most people were expecting at least 1.8 to maybe 2 million. Right now, I'm estimating even maybe 1.65 is going to be difficult. Why do I say that? Well, going again to weekly insurance numbers, you can see that being outsold by NIO and XPeng in China for most of the year. Looking even at the others like Li Auto, Li Auto with the green bars, they are hanging in there, especially in these past 3 weeks, most of the times outselling Tesla comfortably. Then we have the, again, European sale. I don't see this sales kind of rebounding to any kind of levels that they used to see a couple of years ago. It might like improve a little bit, but I don't see them like, unless Elon Musk really goes on the charm offensive in Europe. And then we have all the other important metrics. So look at Tesla's automotive sales and cost of sales. They don't have any like margin there. Like they get quite a lot of revenue from auto sales, but most of it goes to obviously cost of sales. Looking at the auto gross margin, it's falling quite fastly. Now, looking at the energy business, the blue again is the revenue and the red is the cost of sales. I think this one is better for sure, but I'm not expecting Tesla to hold on to these margins. I would say that the energy business for Tesla is right now where their EV business was in late 2021 with the shortages. I do believe that down the road, this margin is going to be suppressed. And if we're going to be like 2-3 years from now, I would expect Tesla to have this same scenario where the gross margin falls like they done for the auto business, but also for the energy storage business. If that happens, they are in huge trouble unless they manage to do like something real substantial with the FSD and Tesla robotics. Actually, I for one much more into like Tesla robotics. I don't like believe that Tesla has the best full self-driving technology in my opinion. I don't think you can just rely on cameras. It's just like not redundant system, and very few, I wouldn't expect any kind of serious regulatory body across this globe to grant Tesla that kind of hassle-free option to just let people ride their cars. I mean, even the smallest kind of rain or sunblock by sun rays will have huge damage to Tesla's self-driving system. And it's not redundant at all. So I wouldn't say that I'm hoping that Tesla is going to make money on FSD. My hope is on Optimus. If you're a Tesla bull, you should hope for Tesla Optimus to like really hit the road running. I mean, they're talking quite offensively about it. So let's see. I would say it's possible. I wouldn't be surprised. But at the current stage, we know with the price to earnings ratio sitting around like, I mean, you can see here like they are like at PE ratios of 100, 150. And actually go into the earnings that we just had. Look at the amount of earnings per share. I believe they brought in 13 cents. At this current run rate, they're gonna do like 50 to 70 cents of earnings per share. Even if they like do a great Q3 and Q4, maybe 1 year, 1.5 earnings per share. For a stock that is currently close to $260 US, I would say that's very expensive for a company that's like essentially not doing that great financially. I mean, they're looking at the revenue. I mean, they're falling quite sharply. They've stagnated and now they're starting to fall. And who knows, like if the competition in China continues at this kind of rate, I would like expect really harsh times for Tesla in a few months' time. The companies like NIO, they're struggling also financially, but at least NIO, like the amount of car models that they have that they can rebrand and refresh, and then you have like XPeng doing just greatly. I would say like it's gonna be a harsh time for Tesla. Looking at the total 2025 sales in China, Tesla at 150,000 or so, NIO at 60,000. Then you have XPeng at 111,000, Li Auto at 120,000, and BYD like in league of their own with 800,000. So no matter how you look at it, Tesla is facing challenges left, right, and center. And again, just for a comparison, NIO and XPeng selling almost 20,000 more cars in China this year than Tesla done. So something's happening. I believe Tesla is a little bit complacent. I wouldn't expect them to be having like millions and billions of additional cars sold with only Model 3 and Model Y carrying the load. They need something more, or they need many more models in my opinion. The opposite problem that NIO has. NIO, a smaller company, they have too many models. But in my opinion, Tesla really needs many more models. Like you cannot just do Model 3 and Model Y and expect to sell like tens of millions of cars of those. So yeah, that's gonna do it for today. I believe like Tesla is, in my opinion right now, not the best option out there. But your only hope, in my opinion, is the FSD and more importantly, Tesla Optimus program. Do you think that's gonna happen, or is it far out in the future and hence the stock is overpriced? Please comment and engage in the comment section, and see you in the next one.